The start of 2026 has been a real roller coaster for India's financial markets. It's a story of two completely different things happening at once. On one hand, you've got these serious storm clouds from global jitters. But on the other, there are these incredible silver linings showing some deep structural strength. So what's really going on here? Let's dive in and unpack it all. Okay, to really get a sense of the anxiety in the market, just look at this number, 9 lakh crore. In just the first 5 trading days of the year, that's how much investor wealth just vanished. I mean, that's an absolutely staggering figure, and it was one of the shakiest starts to a year that we've seen in a long, long time.
So, to put that huge number into perspective, let's see what it actually looked like for the markets. Between January 2nd and 9th, the BSE Sensex just plunged almost 2,400 points. And the NSE Nifty 50? It dropped by over 2.5%. Look, this wasn't just a little dip. This was a real, sustained sell-off that had absolutely everyone asking the same question. What is going on?
And that question brings us right to the heart of what's happening. It's this incredible tug of war. All the market jitters are coming from this intense battle between foreign investors selling off because of global fears and our own domestic investors buying things up, showing some serious strength at home. This right here, it shows you that conflict perfectly. On one side, you have the foreign institutional investors, the FIIs. They sold off almost 3,400 crore rupees in stocks. But then, on the other side, our domestic institutional investors, the DIIs, stepped right in. They acted like a giant shock absorber for the market, buying up over 3,700 crore. Now, this is so much more than just numbers on a screen. It's a huge sign that the Indian market is really maturing. For years, we were so dependent on foreign money, which made us vulnerable. But today, that strong domestic buying power is a crucial buffer. It is a total game changer against whatever's happening internationally. So, what are these global jitters we're talking about? Well, the main reason for all this anxiety is a pretty big geopolitical threat, and it's coming from the United States. This is the why behind all that foreign selling, and it's the dark cloud hanging over the market right now. And at the center of this threat is this one, frankly, shocking number. A potential 500% tariff on Indian goods. No, that's not a typo. This isn't just some negotiating tactic. It's a figure that's being seriously discussed. It's part of a bill targeting countries that are still buying Russian oil. The sheer scale of that number, it really shows you how serious this threat could be for India's export economy. So, let's break this down. The target? It's pretty clear. Indian goods, because of our continued trade with Russia. And what's at risk? Well, it's a massive $120 billion trade relationship between India and the U.S. The whole situation is just kind of up in the air right now because the U.S. Supreme Court is trying to decide if the president can even impose a tariff that huge all on his own. And since they've deferred the verdict, the markets are just stuck waiting in suspense. Okay, but while all that drama is happening in the secondary markets, that's, where we all trade existing shares, the primary market, where new shares are born, is telling a completely different story. So let's pivot to that silver lining. We're seeing a historic wave of IPOs, which is sending this incredible signal of confidence in India's long-term future. And I want to be clear, this isn't just a few companies going public. We are looking at a record-breaking pipeline of IPOs. And this is about way more than just raising money. It's a powerful signal that investors, both here at home and around the world, have some serious faith in the strength and the growth story of the Indian economy. And just look at the kind of diversity and scale we're talking about. You've got the telecom and digital giant, Reliance Jio. You have Amagi Media Labs, a really cutting-edge software as a service, or SaaS company. Then there's Fractal Analytics, one of India's first AI firms to go public. And you even have core players like Bharat's coking coal. This shows that the confidence is spread across the entire economy, from high-tech to heavy infrastructure. And let's just take a moment to really appreciate the potential size of that Reliance Jio IPO. The minimum expectation is that it will raise over $4.5 billion. That wouldn't just be a big deal. It could easily become the single largest public listing in Indian history. I mean, it could totally reshape the entire capital market landscape. Now, you saw Amagi on that list, and it was called a SaaS unicorn. So what does that even mean? Well, simply put, it's a private software startup that's valued at over $1 billion. Amagi, which does cloud-based broadcast tech, hit that milestone way back in 2022. The fact that companies like this are now going public, it just shows how much India's startup scene has matured, moving from private money to being ready for the big leagues of the public market. So you might be wondering, why is all this happening now? Well, this IPO boom and the market's maturity, it isn't happening in a vacuum. It's all being built on a solid foundation of serious regulatory upgrades, led by the market regulator, SEBI. They're basically rewriting the rulebook to create a safer, more efficient market for all of us.
And this slide really shows you how big these changes are. The old rules from 1992, they were designed for people shouting at each other on a trading floor. The new 2025 framework is a total overhaul, built from the ground up for the digital age of electronic and even AI-powered trading. It gets rid of a ton of old, redundant rules, and most importantly, it gives us much stronger and clearer protections for our money and our stocks.
And SEBI isn't just modernizing, it's also getting a lot smarter and more practical. Just take a look at the new rules for technical glitches. First, the rules are proportional now. They only apply to the bigger brokers with over 10,000 clients. Second, they've doubled the reporting time to 2 hours, which gives firms some breathing room. And third, they've slashed the paperwork by creating one single platform for reporting. It's all about being effective, not just creating more work. So what's the real-world impact of all these smarter rules? Well, this number says it all. About 60% of all stockbrokers in the country are now exempt from these stricter glitch reporting rules. This is huge because it eases the burden on smaller firms, letting them focus on their customers, while still keeping high standards for the big guys who handle the most trading volume.
All right, so let's zoom out and bring these two opposing stories together. How do we make sense of this picture? You've got this strong domestic growth happening right in the middle of some pretty serious global challenges. So what is the big picture for the Indian economy right now?
Well, despite all that stock market volatility, the overall economic forecast for India is still incredibly strong. The United Nations is projecting that India's economy will grow by 6.6% in 2026. That would keep us as the world's fastest growing major economy. And that growth is being driven by strong consumer spending right here at home and solid public investment, which should hopefully help offset any fallout from those U.S. tariff threats.
I really like this quote from Rainan Banerjee at PwC because it just perfectly captures the mood among policymakers. Basically, since growth is strong and inflation is under control, the feeling is that the Reserve Bank of India doesn't need to jump in and force a rate cut. It's a real statement of confidence in our economy's own internal strength, suggesting it can power through this turbulence without any artificial help.
And so, that really leaves us with the big question, doesn't it? We can see the global friction is rising, and the threats are very real. But we can also see these powerful internal engines, a maturing stock market, a booming IPO pipeline, and strong economic growth. So the question for 2026 and beyond is a big one. Can these internal engines overcome the headwinds from the outside world and keep powering India's path forward?
Hey, if this explainer helped you make sense of the complex forces shaping India's economy right now, do us a favor and hit like, share, and of course, subscribe for more deep dives like this one.
So what do you think? Is domestic strength going to win out over these global seers? We would genuinely love to hear your take on it. Leave your thoughts and feedback in the comments below. Thanks for watching.